Now, moving on to the markets in Nigeria, of course, the day after the MPC decision, which, of course, didn't give any surprises, the NSE All-Share Index is up just about 0.25% at 36,452 points in early trade. The early gainers at this point include the likes of Nestle Nigeria, which is on the back of which is now back to over 1,000 naira. Other gainers include Total Nigeria, Como Oil, Nigerian Breweries, and Eternal Oil. The laggards are RT Briscoe, Dan Flour, Unity Bank, and FCMB. For more on what's going on in the market, and now crossing to Don Merrifield, where Abdul Garba, an investment research analyst, is standing by to give us some perspective. Abdul, thank you for joining us. So the day after the MPC, we've seen the market move higher, but ever so slightly. Your thoughts about what the MPC decision means for the market going forward? Do you think we're likely to see this market begin to trade sideways until we see earnings in October, or do you think we're likely to see it come down a little more?
Yeah, that's the likeliest of scenarios, a sideways movement for the market. Until earnings releases come, we don't see anything that could actually propel the market in any direction. So
Right.
we should.
Right, but if we look at where interest rates are, fixed income yields, one would argue they're quite high right now. And so, do you think this is something that's likely to hurt the market going into October until we see those numbers? Of course, those numbers are not likely to start coming out till much later in October and perhaps even November.
Yes, they are not likely to come before the end of October. Most results, most of the substantial ones will come around then. This drift is likely to continue just in synchrony with the rest of the markets where investors actually participate, especially very large investors, and we're beginning to see a growth of that in Nigerian equities and bond markets. So up until then, unless something from the external to Nigeria or some great economic event occurs, we don't see a mass entry or exit from the market.
So looking into next year, though, do you think this market is likely to trade higher? All things considered, I guess this monetary policy is likely to stay tight until at least sometime early next year. So your thoughts about what this could mean for equities going into 2014?
Well, for our domestic monetary policy, the likeliest impact that we would see is on Nigerian fixed income instruments. Speaking here, that would be treasury bills and bonds. There'll be more registered impact there than what you can see for the stock market, except for industries that are directly attached to that, which is banks and some other financial institutions. So it's not likely to register market-wide.
All right, speaking about banks, of course, there's some news around First Bank acquiring some assets in Ghana. It seems to be in line with their Africa strategy. What I hear as well is that they've also acquired subsidiaries of ICB Financial Group holdings in Gambia, Guinea, Senegal, and Sierra Leone. So they are obviously trying to spread their tentacles across Africa right now. What do you think? What's your take on First Bank's Africa strategy right now?
Well, it's a natural one. It's one of it's about the oldest. It is the oldest bank in Nigeria. It's also a very strong brand name, just like its predecessors. The First Bank had taken a cautionary step in making this move, but its predecessors in that direction, that UBA Access and Guarantee, have shown considerable success in the Africa expansion. It's only natural that in Africa, where we anticipate increasing trade and relationships. And let's also note that most of the countries listed here, except for Guinea, are all Anglophone countries. So there is some relationship with Nigeria, and similar description would fit most of the economies here.
But what's your take on banks, broadly speaking? A lot of people saying that risks are elevated for banks given the higher interest rates, but some others argue that higher interest rates actually provides a more profitable environment for banks and given the yields they can get in fixed income securities. So what's your take, broadly speaking, on banks right now?
Well, it's only marginal because it would be we're not likely to see a dramatic rise in interest rates offered on short-term instruments. I mean, you're already at 13. You would not be expecting to see a 17. It would be quite unusual to have that, given any instances of shock. So to the benefit of banks, a higher MPC rate doesn't necessarily translate, because we do not expect higher or lower does not translate into monumental profits for them.
All right, but so in that context, what's your take on which banks do you like right now? Which banks do you think one should be piling up right now?
Okay, given what's happened of late, um, implications of adoption of the CRR 50% of public funds, and short-term developments are anticipated, including the AMCON debit. We're looking at a situation where the interbank rates are, on the average, higher, likely to stay higher. Banks would have to fan out and try and raise more deposits from the customers, and in a way to drop the impact of higher interbank funding costs. So these put together, the banks that are set to benefit are those with the better funding strategies, and those that are well grounded in their business and have set up the structures for all of these.
All right, but give me some names. Which stocks particularly do you like?
We'll stick to the traditional three. In terms of franchise, we have First Bank, Zenith, and Guarantee Trust Bank. You have smaller players. Sterling has demonstrated its ability to manage manage on its own through times of in the past. About 2009, we had a similar situation where interest rates, 2008, 2009, deposits offered to customers, interest rates on deposits were as high as 20, 21-ish in some instances.
All right.